Hello there, friends. Welcome to the Dirty Economics discussion on markets. Today's topic is gold, and we know the precious metal is really precious for traders right now. Uh, Giving a short gist on the price action of gold today, we saw an open at $1210. We plotted a low of around 1206. We made a daily high at 1242, and currently the price is hovering somewhere around $1240. The event risk today for the precious metal was none other than the US non-farm payrolls. We saw a very disappointing number. We saw gold move higher due to the reason that the dollar sold off. Gold is actually looking to see the first weekly green candle since the past 4 weeks, but we still haven't actually managed to trace the entire loss of the past week. On a monthly basis, we see the previous month saw a huge outside red bar, and with Asia set to come in on Monday, and if the dollar keeps losing steam, we'll possibly reclaim the previous month's high, which was about $1,300. Now, although gold is supposed to be an inflation trade, it is also seen as a safe hedge, and every other portfolio has some investment amount dedicated to investing in the precious metal. Now, coming to demand and supply, we know that there is a lot of demand for physical gold, especially in the Asian countries. Like if you were in India, gold is actually something that people invest in, no matter what your pay grade is, what your disposable income is. People do invest in gold. Now, personally, I have witnessed analysts saying that the true value for gold actually remains somewhere around $600. But there, we have actually also seen other analysts who believe that it remains for undervalued fundamentally. Now, before we look at the weekly outlook for the metal, we'll try to ascertain whether what are the key elements a short-term trader should be looking at if they want to trade gold. So right now we have Omkar Godbole with us, who has a pretty solid mix of fundamentals and technicals feeded into his blood. And without much ado, let's head over to his charts and thoughts. Hi,
Hi,
Omkar.
hi, Kaushal. How are you?
I'm fine and really sorry for the long introduction on gold.
Nah, that's great. It
So,
was a great introduction.
so I'll repeat my question.
Yeah.
So instead of just going ahead and giving the people a weekly outlook on gold and gold rupee, let's try to ascertain in the short term. Like we have seen, gold is highly reactive to the
Right.
dollar price at the moment.
Right.
So if I'm a short term trader, if I just want to trade in the coming 10 days or 10 or 15 days, what are the
Right.
key elements that I should be looking at in order to gain some insights? If I'm trading, or I should know some basics.
Right. So right now in the current scenario, the only factor that heavily influences gold is whether Fed will raise rates or not. You know,
Okay.
the main reason is that the yields across the globe and especially across the advanced world are extremely low. The bond yields are in eurozone are trading near zero levels. In Switzerland, bond yields are negative. In Japan, bond yields are negative. Equity markets are at record highs, and that is the reason. Plus, also on the commodity front, the metals have suffered huge losses over the past 1 year. And given that the China rebalancing is still far from done, there is ample scope for further losses in commodities.
All
So the
right.
problem here is that investors uh, do not have as an investor, when I look across the globe, especially across the advanced world, I do not see a yield anywhere
All right.
except except for US treasuries and gold.
All right. So you mean to say that most of the bond traders are actually shifting to gold because, frankly, we don't have yield anywhere else, and right now gold is a safe bet.
Yeah, exactly. And that is why I said that the primary determinant of the gold price, especially in the short run, is whether Fed will hike rates or not. Because if if markets believe that Fed is going to hike rates,
Yeah,
that does is it will push up treasury yields.
exactly.
And when treasury yields go up, compared to German bond yields or Japanese bond yields,
Yeah.
that becomes attractive,
All
and
right.
then money shifts into treasury yields rather than going into gold.
All right. But we saw a very weird phenomena. We saw the equity markets rising. Now, when equity markets rise, we can say that the risk sentiment is actually high. But at the same time, we saw a lot of investment in gold. We saw gold prices rising higher. That was a
Right.
very unique.
Yeah.
Uh,
Usually, we usually read everywhere that if equity markets rise, gold would come down
yeah.
because it reduces the safe haven demand. But these concepts, you have to sort of view them in the current context, and the situation changes every other day.
All right.
The thing right now is that equity markets are at such record high levels,
Yeah.
that if you just look at the charts, you will be tempted to go short rather than go long.
All right.
And when in such a situation, when you see equity markets rally, you
Yeah.
want to play on the long side, but at the same time, you fear that there might be a sudden correction.
All
And
right.
that's why you also, at the same time, when you initiate long in equities, at the same time you also go long on gold, because you want to hedge your risk.
All right. So in totality, we can say that even if equities go down, people will actually shift back to gold and in safe haven. And even if they are going higher, people will actually hedge their risk. They'll still go long.
Yeah, because the simple reason is that equities aren't at the bottom right now. Okay.
Yeah.
If
Okay.
they're at record highs, obviously, as a trader, I would think that there is a more probability of correction from here,
All right.
and it's always better to have some amount of money going into gold as a hedge.
Okay. Sounds fair. Fair enough. So what are the charts saying?
Uh, Weekly chart, I'm more glued to weekly chart because I can see a downward channel. It was breached about 7 or 8 weeks back in April.
Yeah.
Downward channel was breached, and this week we have bounced off the falling channel, as we can see.
Yeah.
And as long as support at 1191 stays intact, that is the October 2015 high.
Yeah.
As long as the support at 1191 is intact, the dips are always going to be bought into.
Okay.
And so the outlook is positive on charts, especially since I feel the dollar is going to get sold on Monday as well.
Okay.
And so there is still enough room for gold to move higher.
All right.
And I see gold moving beyond 1300 levels within a month's time, especially if June payrolls report and wage growth report in US disappoint, because
All right.
what that will do is that it will erase rate hike bets,
All right.
July rate hike bets or September rate hike bets. And
Okay.
if rate hike has to come, it will come directly in December, not before that.
All right. So dollar has a lot to go, and we'll actually see buying into gold prices.
Right. So it's all contingent. Obviously, as I said, move above 1300 is contingent on June payrolls report and wage growth report.
We also have event risks lined up in the month of June. So we have Brexit and
Right.
also have the June Fed decision. I don't think there will be anything great in the June Fed decision, but I guess gold will see buying, and we can easily reach $1,300 level.
Yeah. See, gold. The funny thing about gold is that if it isn't moving higher in dollar terms,
Yeah.
it definitely moves higher in some other currency terms. So
All right.
now we have Brexit thing going on. If this exit polls start gathering pace ahead of June 23rd referendum,
Yeah.
surely gold would strengthen in terms of British pound,
All right.
and that would also push up gold higher in dollar terms as well,
All right.
because the safe haven flows would obviously hit gold again.
All right. So if I want to trade gold, it's better that I also keep an eye on gold in pound terms.
Yes, most of the time it happens that when dollar strengthens, gold strengthens in terms of Asian currencies
Yeah.
or emerging market currencies.
Yeah.
So people say that gold is not a long run bull story or gold is looking weak, but there is always in some part of the world, gold is always on the rise.
All right. So right now, in looking at the charts, I can see that we have a higher high and actually a lower low.
Yeah, this is a higher high pattern that we can plot. This is you can call it as a rising wedge,
All right.
sort of thing. When viewed on a daily chart, it would look more like a wedge, and we have had a bearish break few
All
days
right.
back.
Yeah.
But I don't see sell off now, at least not for next 1 month or so.
All right. So as soon as we break about that trend, and we should actually buy and
Yeah, it's I guess this trend line would be breached around 1260-64. The resistance comes around, and gold, if not breached, gold should at least test 1260-1270 levels
All
in
right.
next couple of weeks.
Okay.
And I guess dips should be bought into, as I said earlier, uh,
Okay.
as long as 1191 support stays intact.
All right. So you're expecting the Fed to hike on December, and we only have one event risk. We have the Brexit risk this month. So if you, what's your outlook for the year end? Where do you see gold?
So there are lots of ifs and buts involved. The first if is about Brexit. If UK exits EU,
Yeah.
then that will rock financial markets in a bad way, and obviously then gold will run higher.
Yeah.
Then another big if is about the June uh, uh, payrolls report that would come in the first week of July.
Yeah.
Fed would want to see a sharp improvement in the payrolls as well as wage growth numbers.
All
If
right.
they see that, only then July rate hike comes on the table. Otherwise, it's off the table. And if it's off the table, I guess by year end, gold could be anywhere around 1400 plus levels,
I see.
because
So
then there is nothing else that can stop gold.
all right. So we like coming back to our discussion at the start. Gold is actually going to see a buying momentum moving ahead, and by year
Right.
end, we actually see it moving higher. And the long term uh, views of most of the analysts is bullish for gold.
Absolutely.
So
Especially,
coming Monday, I guess we'll go bullish on gold.
right. I
And
guess on hourly charts, it might be a little bit overbought,
okay,
maybe.
okay. Oh, but
Yeah, the RSI could be a little bit overbought. Let's just check out.
we'll stay rangy for some time, and we'll break higher
Yeah,
Monday.
as I said, it's overbought right now. So don't be surprised to see a minor correction, maybe to 1235 or 1230 levels.
All right,
But as I said, dips will be
but
utilized by traders to initiate long positions.
all right, that's good. So can you give a quick summary of your gold analysis today?
This quick summary would be, buy on dips as long as 1191 stays intact as a support level. There's little reason for gold bulls to fear, and the higher side in the short term could be capped around $1260 or 1270 levels. A clear break about $1270 would open doors for 1300. And obviously, as I said, if June payrolls report is bad,
All right.
then irrespective of Brexit or not, gold is going above 1300 levels.
All right. Thank you so much, Omkar. So I'll give a quick gist. Omkar is bullish on gold. He's maintaining a target at 1300 as long as 1191 is not breached on the downside. Gold is going to see buying momentum moving ahead. The June NFP is the near-term risk. And that's it for gold. That's it for our gold analysis today. Hope you enjoyed. If you liked it, please remember to subscribe to our YouTube channel. We don't have so many viewers as such right now. And feel free to message us if you have any queries, if you want us to cover any other markets. And
Okay.
that's it for now. Thank you so much. Goodbye, Omkar. Thank you.
Goodbye, Kaushal. Thanks.